All right, cryptocurrencies. This is something that I have avoided speaking about or focusing on in the 2+ years that I've had this podcast, despite repeated attempts by various people to get me to cover it. And the reason for that is that there's really only two ways historically that conversation about cryptocurrencies could go. Number one, that these were the greatest thing since sliced bread, and we're going to usher in peace on earth and brotherhood among mankind. Or two, they were a complete scam to enable criminality and were not worth the algorithms they were printed on, even though algorithms don't print, but whatever. And so I historically have avoided them for this reason. I didn't want to come in on one side or the other or have the guests speak about one side or the other, but my guest today, Jacob Ma Weaver of Cable Car Capital, has a unique viewpoint on cryptos.
My focus and reason for spending time on this over the years has been a deep interest in investor protection issues. And we may talk later, if there's time, a little bit about my fund and what I do, but I am primarily focused on long and short investments in public companies, many of which touch on cryptocurrency, and it's been important in studying microcap fraud and retail investment schemes and things of the like to learn a lot about this emerging area of technology and investment.
Interesting. And I forgot to mention at the outset that you have been in touch with regulators. We don't want to say who or which ones or in what capacity, but you have been having conversations around crypto regulation with some regulatory folks here in the US, right?
Yes, and so my perspective is informed both by private conversations with enforcement staff as well as some public commentary. But my business primarily is around, on the short side, looking for wrongdoing in the capital markets, and that's alongside a much longer term, long time horizon investment portfolio on the long side, which frees up a lot of time and attention to go out and see if there's some way I can be on the other side of stock promotion, fraud, market manipulation, and ultimately try to do something about that. That's where I found a lot of meaning in the work. Despite the challenges of short selling, it's meant that I could have productive conversations with regulators and members of the public and really try to, where possible at least, affect some change. So some of that is, publishing research, which I've done in the past. Some of it is more behind the scenes. But I initially got interested in exchanges and the topic of, sort of the business of public markets through a long investment in Intercontinental Exchange at this point now 7 years ago. And it was through my research on that I came across some less reputable exchanges that were offering financial products primarily to retail speculators. And I had a published short report on a company called Plus 500, which sells contracts for difference. There's a gambling instrument, basically a swap that's legal in Europe. And that experience led me down a really long rabbit hole that's led to this conversation today. We're basically, over the last 5 or 6 years, I've spent a lot of time digging into that industry. So alongside CFD brokers like Plus 500 that are publicly traded, there was a darker industry of unregulated broker-dealers that sold a related financial product called a binary option. Mm-hmm. And that's been a major enforcement focus for the SEC. It was outlawed in Israel, where a number of the operators were based. And as you can likely guess, a number of the people involved in that business, after previously selling CFDs or binary options or leveraged Forex, pivoted quite naturally to cryptocurrencies. And I see many of the same techniques in terms of marketing, customer acquisition, the functionality of the exchanges themselves present in cryptocurrency exchanges. And I view it as one long continuum of sort of wrongdoing, obviously to varying degrees. And it's prompted a lot of my research efforts in that space.